Hello, welcome back for those that has been joining us before. And for those of you that are new, welcome to Community CPA webinar. Every Saturday we bring you information about businesses and information related to accounting, audit, taxes, all kind of information for you to grow your business. And today's topic is a very common topic and one of those most questioned that small business owner get to ask about audit, right? So we are almost at the beginning of tax season, so audit is one of the things that we normally get, people asking us. So today our focus is about small businesses that are facing one of the most common audit. So that is our topic for today. So before we start, we are gonna talk a little bit about our firm, Community CPA. So Community CPA has been in business for more than 25 years, and we have a team of more than 30 staff that collectively they speak more than 10 languages and they serve more than 10,000 clients worldwide. Okay, no matter where you are, we will be able to serve you. So we have 4 locations. We have 2 here in Iowa, 1 in Minnesota, and 1 in California. Our CEO, Insa, has served the National Taxpayer Advocacy Panel, which basically provide advice to the IRS. She has written 2 books. One of them is Appointment with Dean at 8 a.m. And this one is for those that, want to start a business, don't know what to do, maybe they're a little bit lost. So if you are in that kind of situation, I would recommend you to get this book. Where you can get it? You can get it in Amazon. Those books are available at Amazon. So if you go there, you can find these 2 books. So what happens if you already have a business and you don't know what else to do to grow your business? Then you can get her second book, which is Appointment with Jean at 10 a.m. And this one is about growing your business. So we have 6 partners in our firm. You can go online to www.communitycpa.com to book an appointment with any of them. We have IT, we have business consultation, we have accounting services. You can go in there and then you can find more information about them and also about our firm. Now, our no responsibility disclaimer: the information and advice that we are providing today to you are no legal advice and is not legal in nature. So if you are looking for legal advice, please consult an lawyer. Now, with today's topic, audit. The first one is income tax audit, which is related to income. So at the federal level, what we have, we all know that it is the IRS, right? The IRS is the one that do the federal audit, income tax audit. So there is 3 years that they can do it. Right now we are in 2024, they can audit you 2020, 2021, and 2022. After April, they can audit you 2021, 2022, and 2023. So what caused all of this audit? One could be data mismatch. What is a data mismatch? Basically, it is when the information that is provided to the IRS by a third party do not match with the information that you reported to the IRS. It could be something like a 1099. Maybe you receive a 1099, let's say $50,000, right? And then when you file or you return, you only reported $5,000. So that is a mismatch. A mismatch of the information that was reported by a third party and the information that you reported on your return. So what is the other common cause of the audit? One of them is called data deviation score. So what happened is that your return has a score, right? And that will tell the IRS if you will be more subject to an audit or not. For example, let's say that you reported a gross income of $50,000, but your donation is $10,000, right? So the IRS will assign a score to that return, and will compare it to other individual taxpayer which has living in the same kind of area and also that has similar income, right? So they might say like, hey, maybe your donation is way higher than the amount of income that you are reporting. So what they are looking for is obviously on the reported income over reported deduction or expenses. The other cost is connection from other parties. What happens is that sometimes you could be a partner, right? You could be a partner in a partnership and your partnership got audited. So it is possible that because of that, it might cause an audit on your personal taxes. The other one is whistleblowers, somebody reporting to the IRS something that they say that you were doing, right? Another one is just depending on the type of form that you are using. We all know Schedule C and Schedule E because those are more related to business. Those are more subject to audit. The same if you are claiming some sort of EITC, which stands for Earned Income Tax Credit or Child Tax Credit, or you have asset or in other country, or you have a business that is very cash intensive. Those are the ones that normally are subject to audit. Could be. It's not something that is 100%, but something that it could happen. So what can you do, right? So now you know what could cause the audit. So now what can you do? One option that you have is to do data match. Data match is to make sure the information you are reporting to the IRS is the information that you have in your return, okay? Especially sometimes you receive different kind of form, you don't know which one is which, and sometimes it could be that you receive a form, but then the third-party reporting did an update, did an amendment, make a correction, and then send it to you, but you didn't see it. So then you reported a different amount than what they reported to the IRS, right? So that is one of the things that you should do. You should always do data match. That way you will be safe. Unless you only have a W-2 and you know that you don't have anything else to report to the government, then you are safe. But if you have a bunch of forms, you cannot keep track all of them, you don't know what to do, what is the best way, data match is your solution. The other thing that you could do is to always stay in compliance, right? Hire a professional, hire somebody like Community CPA, making sure that you are in compliance and that you fulfill all the requirements that you need to do, right? So you don't want to be, because the law change frequently, and if you hear the news recently, they are talking about some changes that they are planning to do for 2023. We are starting the season very soon. So they are talking about those kind of changes. So you want to stay in compliance, you want to make sure that you fulfill all the requirements. The other one is to making sure that you have clear and accurate bookkeeping or record of the information. Okay. When you file your return, you don't want to do estimate. You have to have the actual record and your number have to be accurate, right? So if you're adding 2 receipts, you cannot just look at it and say these are $500. You will have to add it up and come up with the exact number. And the one that we always recommend is to hire a professional. Like I say, Community CPA is here to serve you. So if you are not sure where to go, you can always contact us and we are here to assist you. But if you are working with somebody else and you feel comfortable, making sure that the person that you are working with, it is a professional. Because whatever you are paying to a professional, in the long term, you will be saving money. Okay, this is one of the tips that we always mention to every client, that no matter how much you pay to a professional, in the long term, you will always be saving money. There is no way you will be paying somebody more than what you are saving. Now, we discussed about federal audit on the income tax. Now at the state level, no matter where you live, they can also audit you, right? So for example, what is the statute of limitation? So how long they can audit you on the state? It just depends where you live. So we know that in Minnesota, they have 3.5 years. California is 4 years. Here in Iowa, we have 3 years. So it just depends. Also, the statute of limitation limits when you can get a refund, right? When the refund will apply to you. So let's assume that you didn't file taxes for 5 years and you are in Iowa. And let's assume that you were getting a refund for all these 5 years. So what happened is that they will only refund you 3 years, because that is the statute of limitation, right? So even though you were claiming 5 years of refund, the first 2 years they are not gonna give it to you, but the last 3 years they are gonna give it to you if you qualify, right? So then those are the statute of limitations. So what could be causing a state audit, right? Normally we hear about federal, but rarely we hear about a state. Actually, a state also do audit. It just depends what kind of audit. So it depends on which kind of situation. And we will discuss a little bit more about that, because you have sales tax, you have workforce unemployment, and all of that. So what could create a state audit? One of them, it just depends. You know, the state might be targeting a specific program or selection. It could be like a cash business. They might decide to say, hey, we are gonna audit all of these kind of businesses that they are very cash intensive businesses. So they might pick that. They might pick one specific area, one specific group. So it just depends. Also, it could happen because of the IRS. So if the IRS is auditing you and then they finalize the audit, the state could be also auditing you. And obviously, the last one, it is if somebody reports your business. So how long the state can collect on my business? Which means that if you owe money to the government, how long they can collect on you? We all know that the IRS has 10 years. So that means that from the moment that you file, and this is a very important key information, is the moment that you file your return, they have 10 years. So if you never file, then there is no 10 years limit, right? If you file 10-year tax return now, then the moment that you file now is gonna start counting those 10 years. So what about a state? There are many states that they follow that IRS, but there are some of them that they have different period. So we know California and Illinois, they have 20 years. Minnesota again is 3.5 years, and then Iowa we have 3 years. So a different kind of audit is sales and use tax audit. And this one is becoming very common after what happened in 2018. So 2018, if you never heard of the South Dakota versus Wayfair, this is the one that changed the dynamic for online businesses. In the past, it was depending a lot of the physical location. So with that change, I'm pretty much saying the physical location, it doesn't matter anymore. So there are many factors to decide, you know, if you should collect sales tax or not, but this is one of those that change the dynamic for online sales. Many years ago, before 2018, there was many businesses. You can go to Amazon and you can buy something and you might not pay sales tax, right? But now, if you go and buy something, then you will see that there is a sales tax. So what are some of the things that cause this kind of audit? One, obviously, is online sales. If you are doing online sales, that might be one of the reasons. The other one is exemption. What it means is that you are not collecting sales tax and your business is supposed to collect sales tax. It is possible that sometimes you might not collect sales tax. In that case, you will have an exemption, right? You will have a reason why you will not collect sales tax. But if you are in the business that you will normally collect sales tax, and if you have many volume, amount that you are exempting and not collecting sales tax, then your business might be subject to the sales tax and use tax audit. For example, if you are in a restaurant normally you will expect the business to collect sales tax. But if, for example, let's say more than 50% of your sales is non-taxable because you are saying that there is an exception, then it is possible that they might audit you to confirm that, right? The other one is that sometimes you might be reporting sales and is always late, or it is very infrequent, or that you are asking for refunds. So those could create audit. We know that in some businesses you have season, right? So during the, for example, December retail is a season, so we know that sales normally tend to increase. So they understand that. But if you have a business that is not seasonal and your sales, in one month drop 20-30%, the other month it go up, and then later on go down, then the government might be questioning what's going on with this kind of sales reporting, just to make sure that you are not doing something wrong. So those are some of the common costs of a sales and use audit. So what can you do? What are your options? If you don't know, like always, let a professional handle your filing. Making sure that you always have a good record of the sales and all kind of record that will prove that kind of sales that you have and the exception, right? So it could be a cash register if you are doing sales online, all the record from your system online that prove the amount of sales and the amount that you collected. So all of those is very important. So the other one is to understand the difference between what is taxable and non-taxable sales. Keep that in mind that taxable you collect sales tax, non-taxable you don't. But both of them, most of the time you have to report it to the government. You have to report the total sales, and then you will break it down what is the amount that is taxable and non-taxable. And it just depends on your states. Some states require that, so making sure that you know in which area you have to do it. Because sometimes they will ask for non-taxable amounts and they give you different subcategory. Why? And you need to make sure that it is in the right place, otherwise it might cause an audit. And the other one, just a recommendation on your income tax return, making sure that you have the sales tax amount collected or the sales tax amount paid in a different line, and you don't combine it and say tax, because sometimes you cannot tell what kind of tax is that. So if you break it down, then the state has that information and they can see clearly what is the amount of tax that you are reporting. Now, the other type of audit is related to DOL. DOL stands for Department of Labor. The IRS also do classification, and the state workforce is the other one that they also do classification audit. So at the federal level, DOL, what costs an audit, right? It could be that somebody reported you. There's audit, in any kind of audit, could be somebody reporting you, right? DOL normally target employer in low wages. So what are some of those low wages industry? Daycare, restaurant, motel, hotel, cleaning services. So the DOL wanted to make sure that your business is in compliance. Compliance with what? wages. They want to making sure that once you are not breaking the law, right? In terms of wages, they want to make sure that you, if it is federal, you are paying at least the minimum federal wage, right? So that is one of the things. The other thing is that they want to make sure that if an employee qualifies for overtime, that you are paying overtime. The other one is that they don't want you to misclassify somebody and then compensate them in different category that they don't belong to. What I mean by that is this. Let's assume that you are saying that my employee is a salary employee, but maybe that person doesn't qualify to be a salary employee, to be exempted from overtime, right? So that person, even though it is a salary employee, you might still have to pay overtime. So keep that in mind. So they wanted to make sure that you are in compliance with the wage law. So you are not breaking the law, and that you pay the overtime, you pay the minimum wages, and that you are not doing something that you are not supposed to be doing. And they want to protect the employee. So what can you do? Okay, if you are in this kind of situation, what can you do? Making sure that you have a business that is successful, you need to making sure that you always follow the rules and regulation. Like we mentioned before, if you are not sure, always hire a professional. And here at Community CPA, we can do a compliance review for you. If you are not sure if you are doing something proper and you are scared of the federal government or a state agency doing some sort of audit on your business, you can contact us and we will be happy to do a compliance review for you. And you can engage our service, and then we can have a review and then making sure that you are in compliance. The other thing that you can do is to making sure that you always have your records, right? Record is not only a record that you pay the employee, but also, record of time tracking. If you have an hourly employee, you want to make sure that you have the record of the time card. Otherwise, how would you prove that this person worked how many hours, or if this person need to get paid overtime? So the other thing that could sometimes cause this, right, is the employee, like I said, reporting. So it's something that you cannot control because it could happen. So the best is to making sure that you always work with a professional and that you have a good record keeping of time card, agreements, pay stub or payment report, and if you do direct deposit, all of that kind of stuff to prove that you were in compliance. So some of the example what DOL is looking to find, like we mentioned before, is the overtime. So if you have non-exempt employee, non-exempt, that means that they are not exempt, therefore they need to get paid overtime. Salary employee misclassified as an exempt, therefore they are not getting paid their overtime. So they should, right? Deduction. Sometimes you might say that you are forcing the deduction on an employee paycheck, and the law do not allow you to do that. The other one is that if you are in a business that the employee get tips and you are keeping the tips for yourself, or that you are not reporting enough compensation. What I mean by that is that we know in some industry, like a restaurant, a waiter do not make that per hour the minimum wage, right? Because the amount of base wages, hourly rate, is smaller than the federal wages, so the tip will make up for that. But let's assume that that employee is not getting enough tips, and when you add up the tip plus the hourly rate, is below the federal wages. So in that case, you are not in compliance. The other one is that if you have worker that are immigrants, and then there's certain requirement that you need to complete, right? Making sure that the wages fulfill that immigration status of the worker, and also if you're hiring minors, making sure that you are in compliance, because there are certain regulations about the time that the minors can be working for you and the hours and all of that kind of stuff. So you need to make sure that you are safe and then that you're not breaking the law. Employment tax and classification. So this is the area that the federal normally work with the state. So we see more at the state level, and this one is misclassification. Okay, misclassification of workers. But the federal level, what they do is that they also do employment tax audit. We know that they sometimes dealing with PPP and ERC during the COVID time. So those are the one. One of the audit that we hear, and this one is common, but it's not at the government agency. It is an insurance, and it's the worker compensation. It's a private, is when you buy insurance, which basically you are buying the worker comp insurance. Every year after the period, you get audited, right? So this is the more on the private sector that you will get what they call an audit. So, like I was saying, the worker compensation. Worker compensation is an audit by a private company. Let's not get that confused with the misclassification of employee. What is that? Is when you are classifying somebody as an independent contractor instead of an employee. You probably hear on the news about Uber, right? One of the things that they were saying is that some of those drivers actually they are employee instead of independent contractor. So this is the part that we have to deal with classification. So what happened in those, like what is the difference? Taxes, employment taxes, right? So if you have somebody that is an employee, you as a business owner, there is taxes that the employer has to pay, certain benefits. But when somebody is an independent contractor, then it is the independent contractor responsible for the taxes, benefit and all of that. So what are the issue? What taxes we are talking about? We are talking about self-employment taxes, we are talking about unemployment taxes, and for certain industry is a big deal because the amount is huge, right? So what happens is that if you misclassify somebody as independent contractor, but actually they are your employee, then there's two things could happen, right? One, you have to pay all the taxes, right? Not only the employee portion, you pay the employer portion and the employee, right? So normally when you have a employee wages W-2, the employee pay a portion and the employer pay another portion. But in that case, if you get audited and they say this person is an employee, then you will be liable 100% for that. The other one is unemployment taxes. In some industry, like construction, in some state, the unemployment insurance rate is 8% of the wages. So it could be very high, right? And keep in mind, anytime you get audited in either income tax, sales tax, or worker classifications, there is a penalty and interest that you have to pay. Okay, those are very high. We know right now interest rate is so high that if you were assessed, you could be looking at 7, 8, 9, 10%. It just depends on the state or the federal agency and depending on the time, right? So if interest keep going up, that means your interest rate that you have to pay to the government is gonna go up. A couple of years ago, it was very small, 1%, but now you are looking at 7, 8%, just depends. So what are some of the costs of this kind of audit? one of them is that if you are dealing with somebody that didn't know about classification, they don't understand what happened. For example, during COVID time, a lot of independent contractors went to ask for unemployment. They didn't qualify. They were saying that they are employee. So sometimes there is miscommunication on term, right? Sometimes you say somebody is an employee, but actually that person is a contractor, or you say, you know, these are my people, my worker, but actually they are independent contractors. So some term might be used as if they're meant to be independent contractor, but you are saying something that is totally different. The other cost is that when it's term of paying taxes, sometimes they don't understand the consequences of what will happen if you are an independent contractor, right? So as an employee, you are taking taxes out from every paycheck. But when you are dealing with an independent contractor, you just write a check, the full amount, the gross amount. So if I were to give you $500 and you are my independent contractor, I would write you a check for $500, right? But what happened is that at that time when that person need to go and file the taxes, they have to pay taxes. They are surprised, they are upset, they are not happy. And they could say that they were an employee. And that could cause an audit. So those are some of the reasons why a payroll audit happened. So if you are not sure, like we said, if you are on this payroll situation and you are not sure if you have the proper classification, you can consult us. Consult Community CPA. You can call our office, you can go to our website, you can send us an email, text message, and check to see if you have the proper classification. If you try to do it by yourself, one of the things that you can do is to complete the SS8. It is a IRS form which basically you are given to the IRS and you are looking for some kind of guidance on this particular person, right? You want to know if this person it is an employee or a contractor and you are not sure. So in that kind of situation, there is a form SS8. Also, if you are not sure, you can check the IRS and they have 20-factor tests to tell you if this person might be classified as an employee or contractor. All of those are not easy. You go online, you will see that they are talking about so many factors and sometimes you can be confused. Like I say, if you are not sure, always seek professional assistance. In the long term, you will be saving a lot and you will be saving a lot of money and headache, and dealing with the government is not easy. So it's better to be safe than sorry. Okay? And with that, we are gonna finish our today webinar. So the topic of today was common audit that small businesses face. And this is normal, and for us that we have in business for more than 25 years, we see it all the time. So we always advise our client to stay in compliance and always seek professional help. If you have any questions or information here on the screen, and you can go to our website www.communitycpa.com. You can send us an email. It is Catherine@communitycpa.com. She's wonderful and she will be able to help you out or to refer you to one of our partners if she cannot give you an answer right away. Otherwise, you can call our office and our phone number is 515-288-3188. We are open from Monday through Saturday, 6 days a week. There is not a lot of firm that open 6 days a week. And also we are open the whole year. So we are always here to assist you, and if you have any questions, you are more than welcome to talk to us. And with that said, we will see you on the next webinar, which normally is at 3 o'clock.